is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great day and a great week, folks. This quote is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that is in you. Market-wise, let's take a look at it out here. We have the Dow Industrials up 17. NASDAQ is up $1.50, meaning 1.5. S&P's up 2.20. Gold contract down $19.30, trading at $1,207 an ounce. Silver down 82 cents at $16.46 an ounce. Silver was down over $1, and they still couldn't whack the silver stocks or the gold stocks. Pretty incredible, actually. Platinum down $30 at $1,176. And if you're going to buy metal, folks, buy platinum if you can get a hold of it, because bottom line, you get platinum running out at $11.76. Gold's at $12.07. There's some major divergence. Copper down 2 pennies, trading at $2.58 a pound. You got light sweet crude up 61 cents at $53.39 a barrel. Bonds, we have the 10-year off a full point, 127.06. 30-year off 2 points at 144.01. We'll bisect and dissect those babies. And King Dollar down 119 ticks, 94.16. The euro up 58 at 114. And the yen up 86, trading at 119.34. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Let's see what we have out here. We take a look. We'll start off with the SPY and take a look at the SPY out here. What we have with the SPY is this. SPY right now is trading at a price point of 210.11. And we take a look at this baby. What we have is that over the highs of last week. Friday, we got over those highs. The highs that we're talking about out here are 208.26. No doubt we had lighter volume, but this baby is still going higher. If we take a look at the SPX, now this is your benchmark out here, folks. The SPX right now is trading at 2098. You need to close back under 2093.55 to have a failure in this baby. 3Qs, NDX 100. We take a look at the 3Qs. What we have with the 3Qs is this. 3Qs are trading at 106.96. You're doing 12 million shares. Yeah, it's anemic, but you're over those highs. Bottom line is that on Friday, we did 29 million. You're at 12 million right now. That's on the daily. If we put this up on the weekly basis, what you're going to see is this. Weekly basis. Last week, we came in with 118 million shares, taking out the highs that were generated out there that had 151 million shares. We'll see if, in fact, that price is going to hold. Inside the NDX 100 today, what's bringing it higher, well, it's actually flat, but what's putting juice into it is ADI. That's Analog Devices. That's up $1.74. You have Marriott Corporation up 177. That baby's on a tear. You have Micron Tech up 63. And you have the Biogen up 716. Taken away from it, bringing it downtown. You get Vital Communications down 17 cents. We have Cerner off 160. Automatic data, ADP down 185 and Mattel down 17. Inside the Dow Industrials, what do we have happening inside the Dow Industrials? This is what you have. Dow Industrials out here trading at 18,040. The high is 18,103. Bringing juice into it out here today. You have American Express. That's a dead cat bounce. That thing has got killed. AXP. AXP is up 136. That's the leader inside the Dow today. Intel is second at 29. Johnson & Johnson, dead cat bounce. That's up 80. And you get Goldman up 148. Taken away from it on the way down, which continues to want to go down, we have McDonald's MCD. That is down 126. You have Microsoft down 9 cents. ExxonMobil is off 62. And Procter & Gamble is down 54. Let's go to the gold contract. Gold contract out here today, folks. Major price destruction. And inside that major price destruction, which is pretty wild, is that you have volume. But what has happened is that you're going against the day of strength inside not only the gold contract, inside the silver contract. In both of these instances, what you're going against is the spike higher from the December 1st, I believe it is. Yeah, it's December 1st. This is pretty intense, okay? So what we have is this. If you take a look at this, on December 1st, gold traded down to a price point of 1143. We went up to 1221. Monster volume. What do we have out here today? You've done 169,000 contracts, which is a lot. Still less than what we have there, or in fact less than how it broke topside on January 5th. That being said, bottom line, you have 169,000 contracts. The thing that's amazing about this, folks, well, here, now let's go over to the silver contract. We take a look at silver. So you have that baby, gets into a lows. Silver, we go take a look at the silver contract. What we have inside the silver contract is this. Silver gets down to a price point today of $16.26. Highly volatile, no doubt. Has juice behind the move. We did 77,000 contracts. We're at 1646 right now. Now check it out. All silver has to do, which is it's really not in a lower range. If it gets above 1654, or we're at 1646 right now, you're definitely in the higher range. That being said, what has happened is this, is that the XAU, the HUI, they refuse to back off. The gold and silver equities refuse to back off, which is just a total mind blower. And why is it a mind blower? Because this gold contract has come down, and I mean come down substantially from the 22nd of January. We're trading at $13.08. We're down $100. So if you look at that texture, I just want to show you how intense this is, meaning how cool it is if you actually are in this market. So we've gone from $13.08 to $12.07. If we take a look, that's from the 22nd. Now, if we go over to the 22nd and we take a look at Gold Corp, okay, Gold Corp was trading at $24.90. Right now, we're $22.98. They won't break down, folks. It's pretty amazing. And I can tell you, I've done the gold report now for 15 years, I believe. 15, yeah, it's actually 15 years. I've seen divergence. You know, there's been divergence many times. This is probably the most intense divergence that I've seen, specifically meaning that the gold equities, the silver equities are not backing off, and they can't get them lower. So we'll see where this baby shakes out. Dollar and, well, here, bonds. Let's go to the bond market. What do we have with bonds? If we take a look at the 10-year first, what you have is this. You have it coming down. We get light volume, but you're getting decent, well, the volume's lighter than what it's going into. That's what it comes down to. Even the 10-year is at 1.5 million contracts. You're going into 1.7. They got it going with an expansion of volume, but guess what? They're going to have to get it going heavier than that. The 30-year, we take a look at the 30-year. What you have with the 30-year is this. 30 years down a full 2 points. That's a big number. There's no two ways about it. That's a big number. And what you still have inside that 30-year is this. Your 30-year is still down on light volume. You're talking about 381,000 contracts. You need like 500,000 contracts on the way down. So will it go a little bit lower? Yeah, I expect it will go a little bit lower. If we take a look at the actual setup, what we have is that the 10-year right now is trading at 2.1. That was after it actually got down to, I believe, 3.7. So bottom line is that yield is going up. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. We're coming right back. Dow is right now up 18 points. You get the NASDAQ up 1.5. S&Ps are up 2.5. Gold's down 19. Silver's off 82. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 17, Nasdaq up 1.5, S&Ps are up 2.5. Dollar index. Dollar index is trading at 94.16. You got the euro at 1.14. What's going to be intriguing here, folks, watching this shake out about the next year is that we had talked many times about 4 years ago. What had happened is that you had the Europeans as well as the companies and some of the sovereigns in Asia and South America floating dollar bonds, U.S. dollar bonds. That was basically, I'm not sure whether it's one of the reasons that the dollar got so stronger, but there's no doubt when you float a dollar bonds, what ends up happening is that you have to basically have U.S. dollars to float it, number one. You need to pay back in dollars. You got to pay the interest in dollars, all right? Okay, so now let's fast forward to today. So you may or may not heard, and the last few weeks, the amount of European bonds that are being pushed by American companies is phenomenal. It's like the biggest bond offerings ever, okay? You're talking Apple, you're talking GE, you're talking Microsoft. Now, this is where this gets really wild. Because of how the bond structure is right now in Europe, meaning that there are negative yields that are out there, well, that is also happening inside the actual bond structures and GE and Apple and McDonald's, okay? So what does that mean? That means that okay, so right now, I'll give you the exact quote. So right now, you get on GE, it is 0.05% that they're actually paying, okay? This is just crazy. So the yield, the yield of right now is 0.081. That's what it is. Bottom line, okay, this is where I'm going with this, is that when we go over to the dollar, let's look at the dollar for a second. And where I'm going with this is that what you're going to see is that there's going to be more demand, okay, for the euro, just in the context of how many euro bonds are getting floated. So if we take a look at the dollar and see where this structure is right now, what you're going to see is that the dollar got into highs, has had an expansion since 2011 to present day, has gone sideways since the high that was generated out January 26th. So we've had a sideways move since then. The best clue that the dollar wants to at least trade down to this 93.38 area is on February 3rd, you come off that high with volume. Then you've gone sideways. You come off the high again with some kind of a expansion of volume last week on the 12th. How we get into that is going to give us a huge amount of information. I mean huge amount of information. Because the more I'm looking at this, the more that technically it's saying it wants to pull back. And we'll see whether it's going to be a large pullback or not. And if it was going to large pullback, what you'd get is you get volume off the high. That put together, though, I'm looking at these bonds and exactly what is happening with them. There's going to be a lot of euros that have to be bought flat out. And they're not going to, this offering bonds in euros is not going to stop. The second part of that is what? The second part of that is that they may think they're paying negative yields. Well, actually, what happens with those three companies is this. Those three companies have enough money overseas. The reason that they're floating them anyway is that they're floating them because they can't bring all their money back. And so they probably have enough in euros that it won't kill them. Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tommy, how are you?
I'm doing great, man. You having a good day out there?
I am.
Cool, man. What are we going to look at today?
LCI, Lynette.
LCI. Let's see what we have. LCI. So this company here, Lynette, they manufacture, distribute pharmaceuticals under the trade name and generic names. Okay, so the low is 29. This is the last of the year. The high is 62. Okay, so let's see what we got. Okay, so do you own this? Are we looking to buy it? What are we doing here?
No, I'm looking. I own it. I was thinking about selling it today just because of the volume. It looks like it's going through the swing point with not enough volume.
Okay, so it is, but here, so let's take a look at this. We'll put this on a weekly. And
Even the weekly's probably going to be light on volume.
it is, but what I would do is this. Okay, so the first week, folks, when we bring this back to November 3rd, you had $59.44, and you had some nice juice behind that move. At that particular point, it was 8.1 million. Now, you see the last 2 weeks, Brian, how 2 weeks ago we had 4.5 million. Last week we had 4.6 million.
Yeah.
I'd kind of stay right there, because what you have is this, is that what's going to set this up. Let's see, that's February, that's February. So watch this. I'm going to put this on a monthly for a second. And what you're probably going to get is you're probably going to get a monthly that is going to compete with getting over that monthly of 19 million. We've done 10. It's going to be close. But this is an equity that's pushing really with volume, man. So what I would do is that I would take it, put a stop under 59.44. Don't let it get back inside the range, and ride it, man. That's
okay.
You know, I mean, let's see. May 7th is the next time they come out with numbers. So this thing.
Yeah, they just came out with numbers, Tommy, and they blew them away.
Yeah.
That's why it's up so much.
No, you can see. This is pretty intense, folks. Last year they basically, took in 273 million. This year they're looking to take in 406 million. So.
And next year they're looking to double on that. So.
Yeah, it's a big number. I would use the highs of the, the December. No, the highs of November, which is at 59.44, is the stop, because bottom line is that the volume's not that bad on it, man. It really isn't.
Okay, great.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. 877-927-6648. Yeah, folks, if you happen to be up the Northeast, please stay safe, because it is going to be freezing. It's all of 2 and 3 degrees next week. And what a shame. There's a young woman, she's only 33 years old, a trader, that died climbing Mount Washington. And don't go climbing Mount Washington, folks. The sad part about that story is that it seems like they just, I can't understand. Reading the story, her husband dropped her off at the bottom of the mountain. She's climbing the Presidential Range. And I would say that they just haven't been up to the White Mountains enough. If anyone knows the White Mountains, and particularly knows Mount Washington, folks, is one of the coldest places in the whole United States. It's the largest mountain peak in the Northeast, and it's not like the Rocky Mountains, but it's a very large peak. But weather-wise, it's insane. As kids, we skied up there all the time, and you don't go out and mess with that weather in Mount Washington. Sad. This is Tom O'Brien. This is TFNN. Dow Industrials right now up 20. Nasdaq's up 2.5. S&Ps are up 2.5. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. Just stay right there. We're coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. 877-927-6648. Dow Industrials right now are up 4. You get the Nasdaq down a couple bucks. S&Ps are flat. And volume-wise, what we'll have out here coming into the close, right now you get there 500 million on the NYSE. That's going to be short volume. It's going to be about 650 million. On the Nasdaq, what we're dealing with is that you're dealing with a 1.4. So we're going to have some very light volume coming into this close out here. Price-wise, what we've had is this, is that you had the NASDAQ at 4901. Dow Industrials hasn't tagged that high yet, about as close as you can get to it. The low of the high was tagged. It's 18,038. And we tagged 18,052. The high is 103. Bottom line is that that little baby hasn't been tagged yet. If we take a look at the diamonds, okay, inside that structure, the ETF structure, what we have with the diamonds is this. Diamonds out here trading 180.40. We have 2.4 million shares trading out here, and it's 180.71. The thing that's wild, the diamonds did hit 180.70 today. But what does happen, of course, inside the ETF structure, you can't go high for high in the ETF structures at all. The reason being is that you always have an expense ratio that you're dealing with, you know. So that's important to understand when you're looking at that expense ratio. Now, we talked the gold market, folks. Let's go over to the GLD. If you want to see something that's just absolutely... This is telling me, okay, that we're going to see some type of event more than likely out of the Greece deal. It's hard to comprehend, you know, okay, what event could happen out of Greece, because everyone knows that Greece doesn't have any money. The odds are that the European Union is going to strike some kind of a deal with them, even though the European Union turns around and says, hey, listen, they don't want a deal, we won't give them a deal. You know, so they're definitely playing poker. There's no two ways about that. What you had over there this morning was intriguing, because of this morning, what you did have in Greece is that you start having a slight run on the banks. That more than likely would put a spike inside the gold market. When you get fast price destruction inside the physical metal, and when you take a look at the actual equities versus the metal, you have a disconnect that is pretty amazing. Now, if we take a look at the GLD, which trades at 10% of the price of gold, that same disconnect is there. The GLD traded down to 115.58 today. You're at 116.08 right now. It's trading into the December 1st level, which had 15.6 million shares. You're doing 6 million shares. That's a nice setup. That's a nice setup. You're coming in with dramatically lighter volume, not a small amount of volume. So we'll see where this shakes out, but my take here is that something's going to come out of left field and just basically send the metals price higher. The disconnect between the metals price and the equities are pretty extensive. I'm not quite sure whether I've seen gold come down $100 before and the equities not come down 10, 15, 20%. There's no sellers. There's no sellers in them. What we did have over the weekend come out is that you had the 13 filings. What that is that that is either the buyers and or sellers inside the equity market. They have to basically file, and those are 45 days late, but you can glean quite a bit of information out of those filings across all sectors. If we go take a look at Apple, what you're going to see with Apple is that there were some big movements out of Apple. You had American Capital Group. They sold 30 million shares. They have 41 million left, but they were one of the largest sellers out there. Goldman Sachs pushed 11 million out. They still have 45 million left. That's as of December 31st, mind you. The list goes on and on. The buyers, so you get the, there's no, you know, you have a lot of buyers inside Apple also, new buyers. But those buyers are hitting 5 million, 4 million, 1 million versus the sellers, which were 15 million, 11 million, 30 million, 8 million, 7 million. So there's some decent numbers out there. You know, we'll see where the whole thing shakes out. If we do go look at Apple right now, Apple's trading at 127.83, and you know, the deal this morning out in Apple is that are they getting into the car business? It's like, really? You know, there is no doubt that what I expect you're going to see, folks, is that, and it always made no sense to me, particularly being in the media business, that why are not each one of our radios just totally interconnected with the internet. It just totally made sense. I mean, it's like a no-brainer. You know, if you have a Verizon card, I use the Verizon card, you know, when I'm not in the office, and you connect it all the time, like nothing. And it's almost like when you take a look at satellite radio, it says, okay, satellite radio, no doubt, is cool. But when you look at the internet, it's like, hold it, all you need is the connection. So I can see them wanting to basically have a full connection in the car at all times. I can't see them making cars. What does happen, though, is that cars aren't that hard to make. That's the other side of it. That's where it really comes down to. Some of the Dow stocks out here. Let's take a look at some of the Dow stocks. You get Big Blue up 33 cents. Big Mac is down 146. McDonald's continues to have problems. That little baby has just gone back up to its downdraft. If you want to see how equities like to trade, we take a look at McDonald's. McDonald's had the vicious downdraft from the price point of $97. That was on the December 8th, 97. It goes down to 87. You came down with, what, 11 million shares. She's trying to get into that area. She tried to get into that area last week with 7.9 million. Now what you have is that she's going to go back to the bottom of that consolidation that she's been trading in. We'll see whether, if in fact, she can get any juice. It looks to me like McDonald's basically has a long way to go downtown. Amazon's backing off slightly out here today. You get Amazon down $7. Now that's a lot. The top of the gap on Amazon is $3.59, and right now you're trading out at $3.74. So that $3.59 is game. What we will see out here this week, once again, you can expect high volatility, folks. The volatility, I expect you're going to see also is inside the currency area. The currency area, bottom line, is going to be where the volatility comes in, and we'll see what, in fact, pushes the equities around once that volatility is not only there, but continues. We take a look at that euro. With euro dollar right now, we are at 114. You know, we'll see where the euro can get any juice topside. The game of chicken between the European Union and the Greek government is still on. It's on in spades. You had the German, one of the German finance folks saying out there today, hey, listen, they're saying they don't want a deal. Okay, they don't want a deal. They don't have a deal. It only took about 3 hours after that statement by the finance minister from Germany that the finance minister from Greece comes back, and they're trying to prepare a 6-month extension of the agreement. The bottom line, folks, there's going to be an extension, and I suspect it's going to be on better terms than it has been. Now, the real key there is that what will that do to the U.S. dollar? What is it going to do to the euro? And are banks going to get paid back at all? Or, in fact, does push come to shove, and they said, that's it? Because you know what does happen inside negotiations, especially something as emotional, as intense, because you got to remember, the Greek government, they got elected saying they're not going to keep the same terms that are out there. You know, so that's a wild card. There's no two ways about it. It's a wild card, and it's big time wild card. We go take a look at the UK. What we had with the UK out here today is this: the FTSE is at highs. It rejected lower price out here today. It went down to 68.19, closed at 68.98. The high is 69.04. You know, so you're talking about right next to the high. Oh, what, 5 points? So that little baby is going to get tested tomorrow. You know, we'll see how it handles that high. That hasn't been able to break topside going all the way back. It looks to me like February. Yeah, it's longer than that, actually. This is pretty amazing. You go back to May of 2013. Maybe further. Let's find out. No, May of 2013. So the FTSE, this is going to be a big heads up. So the FTSE, folks, okay, has been trying to break this high since and stay above it since May of 2013. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's down 1, Nasdaq's off 2, S&P's are flat. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are flat. Nasdaq's down $1.50. You get the S&P's flat. And let's go over and take a look at that oil contract. So oil right now, folks, is trading out at $53.47. And this is going to be intriguing to watch how this shakes out. And this is why. CLH5. Okay. So what oil did out here today is this. We got to a low of $50.81, rejected that low, closed out, well, still trading out at $53.47. That number, okay, we've done 472,000 contracts. Your high is on February 3rd. We did 645,000 contracts, and you're at 54.24. It looks to me like that high is going to get pushed. And if you get volume behind the move, bottom line is that this thing probably will go up to, let's see, yes, it's a 66 bucks. So this is going to be wild watching this baby shake out. It would make sense, you know, by the way, that you can get a dead cat bounce. The real key is going to be how, if you get over these highs, how do you do it? Meaning, because if we come up to these highs with volume and get over them with volume, it's going to be real easy to really get up to like 73.45. The reason being, folks, is that we went down that fast. The oil market actually came down that fast. It was at $93 September 2nd. By the January 29th, we're at 43. So that's going to be important to basically see, is that a dead cat bounce, or was that the low that was established inside the oil market? If we go take a look at the continuous contract right now is at $53.46. That contract there, let's see, would have to get out of, that's interesting. All this has to do is get over 54.62, and that would get it away from the low of 32.40. See, the low of 32.40 is the low of 2008. We got down to 42. We get down to 43.58, so you get $10 above that. You get above this high of the low, and then you can really do a decent dead cat bounce, because this is a normal dead cat bounce. Now, check this out. This is pretty sick. A normal dead cat bounce, meaning, when I say normal, meaning that it would still can go to lower price, would be, we're almost there actually, it would be 67.46. 67.46 is a 0.382 retracement. That's the weakest you can get. A 50% retracement is 74.83. And if we get over these swings right here of 54 rather, with volume, that'll go to 74 bucks. That's the way it seems to be set up right now. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi, thanks for taking my call.
Sure.
Since you're talking about energy, could you look at the UGA?
UGA, is this up in Canada?
No, it's a gasoline ETF.
Okay, UGA, a gasoline ETF.
Yeah, I've scalped it already, and I'm kind of worried that maybe the train has left the station. I should chase this thing. Do you see any downside on this?
Let's see. It's United States Gas Fund, Exchange Traded Fund. Let's see. So it has a problem with liquidity, though. This is pretty trippy. Mm-hmm. Okay, so you don't have a lot of liquidity in this thing. But, you know, okay, so you're at 36.04. The high is 36.60 and it has volume in it.
Mm-hmm.
You're in this right now, right?
No, I scalped it. I'm out right now.
Okay. So if you're going to get back in it, I mean, if you can get it down to 34.64, which is the low that was established on the 10th, that wouldn't be bad.
Is that a gap fill? Is that like correspond to a gap fill?
It wouldn't be, because what you have is that this only trades market hours 9:30 to 4, and gasoline's trading around the clock. You know what I mean? So that you're going to have gaps all over the place here.
I see. Okay.
That's
so this has a potential nasty short squeeze, huh?
No, because okay. So watch how this works, folks. This is important to understand about ETF structures. ETF structures are not going to have short squeezes because the ETFs themselves are created or destroyed on a continual basis. So there's unlimited amounts of ETFs. So an ETF is never going to have a short squeeze. Short squeezes have to do with the underlying equities and the amount of shares that are shot from that. That's where a short squeeze can get done. And if you want to get an edge, folks, what does happen is this, is that you could look at a ETF structure and look at the underlying of the ETF structure and see, in fact, is there that underlying feature that a large amount of stock is short. That would give you a decent indication of you might have a shot at getting an edge on someone or some other trader if, in fact, that was set up like that.
Okay. All right. Thank you very much.
Okay, man. Have a great one. Have a safe one. And there's a half dozen ETFs, folks, that you could get that type of information on. I mean, well, you can get the information on all the ETF structures. What I mean specifically, though, is that the structure that 5 or 6 of the large weighted equities, if they were highly shorted, that would make a difference. And, you know, if we take a look at the XLE, the XLE basically is you know, Chevron, ExxonMobil. That is like ExxonMobil's 16.2% of it, Chevron's 13.2% of it. That would be something. The IBB, same deal inside the IBB. What you have inside the IBB is that you have the aspect that Biogen is 9.6% of it, Celgene's 7.7%. You know, if you start talking like that and you really want to bisect and dissect them, that'll give you a decent idea of what's going on. But right now, even inside, Biogen is only 1.3%. If we look at Celgene, inside Celgene is 1.38%. That's nothing. I mean, almost every stock in the world is shorted by 1, 2, 3, 4%. 1, 2, 3% for sure. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm going to be coming right back. Dow Industrials right now are up 10. Nasdaq's up $1.50. S&Ps are up 1.75. We're going to be right back.